Time now for our Wall Street Week daily segment. With extreme weather events like the Maui wildfire and Tropical Storm Hilary becoming more frequent, the CIO of CalSTRS says investors will need to start paying attention.
Too often I hear, oh, well, that's a one-off event. That's an unusual occurrence. You're going to see more flight disruptions, more dirty air, more weather extremes, heat and cold, more droughts and rain, and that's absolutely going to be consistent for the rest of our lifetimes. Get used to it and adjust. And that means our investment models have to adjust to the volatility.
Wall Street Week's David Westin spoke to the Environmental Defense Fund Vice President for Economics and Policy Analysis about changing the way we assess climate risk.
What we're seeing now is just repeated examples of natural disasters, climate extremes happening at scales we haven't seen before, in places we haven't seen them occur before. And so we're really in this period of growing natural disaster risk. Insurers tend to be some of the most sophisticated risk assessors that we have out there, but historical experience is no longer a good indicator of what we might see coming forward. And so that's why we're seeing the industry and others turn to a variety of modeling tools in order to try to get a handle on how risk is changing. But it does introduce some much greater levels of uncertainty about what the future might bring.
So if you're the government or if you're a private insurer, how do you take a look at those models? Is it a matter of they happen more often, they're bigger when they happen, or they're just popping up in places, I say, like in Maui, that you wouldn't even expect them to happen at all?
Yeah, absolutely. All of those things. And so what we're seeing is a need to merge some of our traditional tools for assessing the impact of natural hazards with understanding from climate scientists about how climate is stressing these systems in ways that are leading to changes in, exactly as you mentioned, the location of extreme events, their severity, their frequency, their duration. We're seeing a number of changes across a range of climate-related perils, and those impacts are starting to be felt on the ground.
As people try to work through the models, reform the models for a different climate, what are the respective responsibilities, in your judgment, of the government, the public sector on the one hand, and the private sector and insurance companies on the other?
Yeah, well, what we're seeing is that the traditional model of insurance, particularly for the homeowners market in the US, is one of 1-year annual policies. And so because of this, they're most interested in what the immediate risks are in the coming year and the short term. And they're able to rapidly adjust their exposure by changing where they're writing policies. And so they're able to respond fairly quickly as they see risks changing over time. The public sector is making investments in many long-lived things, our infrastructure, where we allow building and the type of building. And those investments are going to have impacts on what losses we see decades into the future. And so in some sense, they need actually a much longer term view of how risk is changing over time than insurer needs for their immediate business decisions.
Well, we're seeing some of that response from the insurance companies already. For example, in California with insuring homes, as I understand it, for example, Allstate, I think, pulled out of the state. Is that helpful or hurtful? I mean, the fact that an insurance company could just say, okay, we're not going to write policies there anymore.
Yeah, we're seeing this trend now in a number of climate stressed markets around the country, where as the risk gets to be too high for insurers to comfortably or profitably cover, or to be able to cover at prices that people can afford to pay for their insurance coverage, we see the private sector contracting in these markets. And what happens in response is that that risk is usually transferred over to the public sector. So we have a number of public sector disaster insurance programs to essentially pick up the risk when the private sector can't or won't. This has been happening for over 50 years with flood. We have a federal program to provide flood insurance when the private sector pulled back from that peril a long time ago. But we also see state level disaster insurance programs in every state that's prone to hurricanes. These are sometimes called beach plans or wind pools. And in some states like Florida, they're writing a growing amount of just standard property insurance and wind coverage in their state. We're also seeing in places of wildfire risk, to come back to the recent fires, but also California is seeing growing fire risk, and they also have a state program that's now writing more of these policies. The challenge of this, though, is that that's just shifting the risk to the public sector, and it might ultimately come back to hurt taxpayers.
Well, Well, what about that risk shifted to the public sector? Because I've understood from some of your work, actually, that we have, of course, FEMA. We have a certain amount that's appropriated every year, but increasingly we have to rely upon special appropriations because the basic appropriations are not enough. Is that working? Should we reform the way we're really appropriating money for these natural disasters?
Yeah, the increasing risk that we're seeing around natural disasters is impacting not just the private sector, but our public sector disaster programs. As you mentioned, when a disaster is very severe, it often gets an official declaration from the president, and that opens up a number of different types of federal programs and federal dollars for people. FEMA governs many of these disaster dollars, but not all of them. And we are seeing that as we have more severe events or more frequent events, in order for FEMA to keep making those payments to households, to local governments to help with disaster response and recovery, that Congress needs to appropriate more and more dollars into those programs in order just to have the funds to keep paying people.
To come back to Maui for a moment, our hearts all go out to the men and women, the families in Lahaina. But what should the goal be for the government, for the private sector? Should the goal be to rebuild Lahaina the way it was, to rebuild it better? What should we be trying to accomplish here?
Yeah, I think what we need to do is start thinking of these disasters, as terrible as they are, as opportunities to rethink the way we're building and where we're building so that we can be better prepared for the future, so that in the future, these types of events aren't so tragic and don't impose so many losses. The real difficulty is that in the aftermath of a disaster, as everyone knows, is a really hard time to be thinking about those needed changes. And so we need to, as communities, as the federal government, as individuals, start thinking about what those shifts are that we need to be making in terms of our development, and to help us be prepared to implement those when the time for rebuilding comes.